You were listening to chartingwealth.com for Monday, the 29th of February, 2016. We always start with IYY on the two-day chart. And what have we seen as the week has wrapped up as we start to go into Monday? Well, we have 5 upward green open box candles, derivative oscillator that's accelerating, and a MACD and signal line that are diverging from each other. The market is in an up move confirmed on the big chart. That is our two-day chart. If we look at the 4-hour chart, what do we see? Well, we see things a little different. Market crossed over originally back on the 16th when it went from red to green on the derivative oscillator, and the blue MACD line crossed over the red signal line. Market then sort of went sideways around the 19th or so, up a little on the 22nd, down from the 23rd to the 24th, and then started tracking up again on the 25th, and the 26th stalled out a little bit, down 0.04% to end the week. That's the way the market ended on Friday, above the two-day trend line. Kept hoping that it would be a crossover going down on the short chart, so we might be able to find an entry point to make some money on the up move that's getting a little long in the tooth. That hasn't occurred yet. We've not found a trade at this point. So we are just standing by watching the market right now. Now, if we go and take a look at the two-day chart on the S&P 500, we see that the S&P 500, like the total market before, has been up over the last 10 days or so. If we look at the short chart, that is the 4-hour chart, we see that it too on Friday was down a little more than the total market. The S&P 500 was down about 0.25%, still above the two-day trend line. Derivative oscillator is positive. The MACD is still positive, not all that positive, but the MACD is above the signal line. Still looking to see if we see a pullback, which we have not seen yet. We will see what the new week will hold, but we still don't have a tradable position. Now, lastly, as far as the indexes go, we're going to look at the Qs. We're going to look at the Qs, which is the NASDAQ 100 first on the two-day chart. It has actually a total of 6 upward moving candles, although back on the 24th, the two-day candle was a red open box. Still, the market continued to trudge up above the two-day trend line. Now, what we need to look at is what's going on with the 4-hour chart. 4-hour chart is above the two-day trend line, and it is continuing to track upwards. We have a positive MACD and a positive derivative oscillator. We're still looking for a rollback, so we might find an entry point. Lastly, we will look at gold, and we'll look at gold on the two-day chart first. Still positive, although it's been slipping sideways really, but still above the two-day trend line. And if we go back and look at what gold is doing on the 4-hour chart, we can see that gold has been tracking down on the MACD, is just at crossing over the two-day trend line. Don't have a trade in gold yet. If gold does manage to cross over in the next week going back up, and the two-day trend line stays in a positive, we might have a possible trade after this long roll back, sliding sideways. Might actually be able to find a trade in gold. Hasn't happened yet. That is how we ended up the week as we go into the new week starting on Monday the 29th. Hope that you had a good trading week. Hope that you're going to continue to follow us every day and help find those times when it makes sense to enter into the market. And again, remember, we are not a stock calling service. We're an education firm. We want you to be with us every day. Find out what's going on. Do practice trades with your virtual account. Once you get good, you can make your own decisions. Thank you so much for being with us. We love to hear from you. Follow us on Facebook, Twitter, YouTube, Instagram. We love to hear from you. From chartingwealth.com.